Economical crisis phenomena in Turkey and Argentina include lead to say of infection, the risk of finance problems in one nation spilling above in other. The abrupt waterfall in the importance of Turkey's lira and Argentina's Cuban peso include led to fears how currencies of southward Africa to Russia will pursue fit. In Asia, India's rupiah and Indonesia's rupee include already been strike. Put just, infection is a personality-fulfilling trial, whereby economical problems in one nation quick investors to sell holdings in economies in such risks. In a globalized planet, a meltdown in one nation can as well rapidly distribution to other via trading links or credit by banks. How is why a downturn in Turkey or Argentina matters to foreigners, for manufacturing holidays down there more profitable. Trading is the evident way for anxiety in one nation to influence else. While an economics begins to stammer, companies tend to cut manufacture and later jobs. As a outcome, consumer include less than cash to expend on consumer goods, consisting imports. The is bad news story for world business community how exportable a lot of consumer goods to the nation. If a meltdown as well causes a nation's exchange to loosen, the price of imports growth, future suffering consumer demand. Yet, Joseph Gagnon at the Washington-based Peterson Institution for World Economy, says Asia has really low trading links in Argentina and Turkey, so how is not lot of a worry about. Rajiv Biswas, Asia silent head political economist for IHS Markit, as well says trading in Turkey is an hardly canal of infection for Asia, with the area relies more than hard on big economies such as China, Europe and the US for their supply. This more than considerable anxiety for APAC Asia silent nations would be if the Turkey economical meltdown results in infection to growing markets currencies and equities, that could potential flop considerable equity outflows of growing markets, he told. The sentence growing markets refers to evolving countries in Africa, Roman America or Asia. Time main economies such as the US, the UK and Japan tend to include high residing standards and more than advanced finance system. For an economical meltdown, investors tend to sell more risky holdings, such as growing marketplace currencies or stocks, and conduct onto more secure ones, such as the US buck or by the government ties given by main economies. Julian Evans Pritchard, a elder China political economist at Equity Economy, says countries how trust on cash of across the sea and include overseas inflows of cash money in their stockpile and ties markets are especially at hazard of infection. This hazard is how, while mood turns more than adverse, overseas investors begin to drag out such cash, that has an effect on the exchanging bet, he told. Two countries how adopted a lot in overseas exchange, normally in US dollar, the can do it hard for them to return their overseas exchange expressed obligation. Hows which happened in 1997 for the Asiatic finance meltdown, for sample. In Asia, both of India and Indonesia trust hard on overseas equity inflows, that is why their currencies incurred in special. India, an oil importing nation, has seen its importing draft growth on in high oil prices and that has inflicted its present expense deficiency to expand, told Mr. Biswas of IHS Markit. A nation how rest a present expense deficiency may trust on inflows of overseas cash to financial conducting and investment. Indonesia, meantime, has low overseas exchanging reserves and a top standard of overseas property in the regional justice and ties markets, Mr. Biswas added. That makes it especially sensitive to investors hauling their cash out of the nation. Elsewhere infection can distribution is while banks in one nation own holdings in else nation that is in anxiety. The economical problems can reason the importance of these holdings to drop. While how happens, investors worry about how a banking will manage in the declining importance of the holdings, and how they will influence its capacity to give cash to consumer and some borrowers. Such a concerns weighted on Europe banking shares newly, in investors concerned on how lot Turkey holdings they their own. Spain's banks are the largest vulnerable to Turkey, on to IHS Markit, quoting information of the Banking for World Settlements. They include on Euro 81 BN of exposition to Turkey holdings, and France banks include exposition to on Euro 35 BN. But IHS Markets Mr. Biswas told Asiatic banks exposition to Turkey was bounded. In the big image of the banking business sectors of the Asiatic countries, there would not be a severe adverse element in their worldview, he told.